We are live. We are live. I'm so excited. I'm glad to be here with you. I have my friend Cassy. She's here with us as well. Listen, you are in for a treat. Cassy, how are you today?
I'm doing great. How are you?
I'm doing great, Cassy. Thank you for joining me. We were just talking. I was smiling and laughing because I know your plate is full. I know you have a lot going on, but you took out the time making this a priority to share with us and share and give back. First thing I want to ask you, how did you get started in the mortgage? Why mortgage business as a loan officer?
Oh gosh. So I got started by chance, to tell you the truth. I was hired when I was 22, 23 to work at a mortgage company, answering telephones and making coffee, kind of a receptionist position. And the paperwork fascinated me, the urgency, the real estate portion of it, helping people qualify. It was kind of like solving a puzzle. And I just took to it. I'm good at following directions. I'm good at following the rules, and it just made sense to me. And so I um, moved up to a loan processor pretty quickly. And I was baptized by fire, as they say. It was 2003, and mortgages were hot then, just like they were last year in 2019, 2020, 2021. And there was a lot of work to do, and there were a lot of people to serve, and there was a lot of competition. And so I got years of experience in and just, a couple. So I processed loans, and then I decided that I was going to originate loans. Um, and so that's how I ended up here, 20 something years ago, just because
Wow.
I answered an ad to be a receptionist.
Wow. Did y'all hear that? See, this is what I'm talking about. And this is why I want you to join us because so many people right now want to buy a house. So many people right now want to build their credit. And you just never know what'll come out of it if you take that step. You answered that call and look at you today. And listen, you said something that stuck to me, the rules. That's what got me in credit too, because like you have all this cash, you're paying all your bills, you're trying to stay out of debt, and then when you get ready to purchase something, they say, "Hey, you have no credit." You're like, "What? What?" I didn't think about all those rules. So we're gonna talk about that. I'm gonna have your link in the description. So any of you that's watching this right now, we have someone watching right now on Cassy. If you're watching this and you want to reach out to Cassy, you have any questions, drop it in the comment. Her link is going to be in the comment section as well. That way you can reach out to her and maybe you're going to hear something that says, you know what, I need to apply. Cassy, right now, what is the biggest topic in your mind that comes to mind when we talk about mortgage buying a home?
You need to get started, Um, the hot topic, everybody wants to talk about interest rates. These past couple of weeks, people call and they're concerned about the bank failures, and they want to know how that is going to impact them. I have a lady, she's closing this week, and she sent her money to the title company last week because she was afraid that the bank was going to fail and her money was going to disappear. So that's what's on people's minds right now. But I don't think I think that's a fad. I think that's just a snapshot. I think that that'll pass. To truly buy a home, you need to under you need to apply. You need to understand what your situation is, what it looks like, what your options are right now. If you want to go out and buy a home tomorrow, what does that approval look for you? And if you want to buy in a few weeks, do you have time to make some changes? A few months, can you put yourself in a position to buy a different house or to get better terms? It's very mortgage is personal, and so I like to talk about each individual person. Make
Me
sense?
too. It makes so much sense, Cassie, because I think the biggest thing is when we wait. Well, I'm going to buy a house next year. Okay, when you going to get started? I'm going to get started at the end of this year. Too late already. You said it. Let's start right now. Even if it take you a year, even if it take you 2 years, that seem like a long time, but it's really not. When you actually get busy doing the work for it's like, okay, maybe I need to increase my income by $20,000 a year. Oh, maybe I need to increase my, credit score maybe about 10, 20 points. And a lot of times, as we know, it's a range. Like somebody credit score may be a 700. is in the range where they can go ahead and apply, but they will wait and say, no, Cassie, I want to wait till my credit score is a 720. And you're just like, well, just go ahead and apply now because that 20 point is not going to make that much of a difference unless it puts you beyond another range. Can you talk to us about that right now? What's happening? What the credit score, what should it look like if you're seriously ready and ready to move forward to buy a home?
So to obtain a mortgage at all, I need a score of 500. 500. You're going to need a 10% down payment with a score of 500. And so it's going to take a lot of money. I have people that do that. But I have people that do that. So if that's important to you and that's how you want to spend your money, I think that that's great. Sometimes I think it's a little bit smarter to look at that 500 score and see what we can do to bring it up in the next 2 or 3 months. Let me tell you why. If you buy a $300,000 home, 10% is $30,000 just for the privilege, of getting into the home. If you buy a $300,000 home and you have a score of 580, I'm going to need about 7,500. There's a big difference between 30,000 and 7,500. In addition, you're going to pay more for your interest rate if your score is under a 600. So if you're between a 500 and a 580, your interest rate is more expensive because it's considered a riskier loan. If we can get you between a 580 and a 600, your interest rate's a little bit better. We can get you up to a 600, your interest rate's a little bit better. And then if we can get
Yes.
you up to a 620, then you qualify for quite a few down payment assistance programs or home buyer programs. Some of them require that you be a first time home buyer and some of them don't. Some
Yes.
even some even help you if you own another property. There's restrictions and all that kind of stuff, but it just depends on where you're at. So ideally, I would love for you to be at a 620, especially if you have limited assets. That's where you're going to need to be to actually get yourself into a home. If you have a little bit of money saved up, and for some reason you just can't get over that credit hump, then you can buy at a 580 or a 600 or even a 500 if you have that money saved up.
Excellent. So listen, that should motivate you right there. If your credit score is a 500, you're already in a position to where you can buy it. But she shared with us it's better to get it up, but you got to bring some cash to the table. So right now, you don't allow your credit score to hold you back. Start saving up that cash. Yes, I know inflation is a factor, the economy, groceries, everything has gone up. Everything. So you just want to get yourself in a position. Cassie, one time, me and Marguerite, my wife, we was talking and we got everything lined up. The money, the credit. I mean, we was ready, the savings, the income increase. We worked and got everything up. And right when we did that, there was no houses we saw we wanted. She was like, what do we do now? I said, hold the financial position. And I've noticed where lenders are looking, and you can correct me on this, and I want you to share on this. You're looking beyond the score. The score is not the only factor when you're purchasing that home. So you want to look beyond that score. And one of the things that I encourage people all the time when I'm coaching them with credit is, are you stable? If you open up that credit card, are you going to close it in 6 months? Are you going to close it in a year? Or is this something that you're going to actually have for years? And a lot of people that I coach, they say, well, I don't want any debt. So think about that. You don't want any debt, but you want a house to obtain that loan. And you're going to be paying on this mortgage for 30 years, right? So I encourage people, there's bad debt, which represents debt you cannot pay. You don't have the cash to pay for it. That good debt is that cash that you have that you can pay for it. And the home is going to be building equity. So there's a lot of benefits to purchasing a home. What are the factors that you look for when we're talking about the credit score, their report, their whole picture?
So I look at the most recent 2 year history. That's what I want to see. I want to see what's been going on for the most 2 years. I focus on the most recent 12 months. That credit score is going to let you go through the door. It's not going to promise anything on the other side. It's just going to let you in. Okay. I'm going to look at your employment. I want to see that you have either been working for 2 years or that you have been in school preparing to work for 2 years. Now, that doesn't mean I need you to be on your job for 2 years, You can have several different jobs in that 24-month period, but I need to see that, you constantly work, because I want you to be able to make the mortgage payment. And once you own that home, I want to be sure that I'm not putting you under duress, or, ushering you toward foreclosure if you don't have a history of, bringing in that income day after day. Um, it's been a really hot topic these past couple of years, not so much anymore because we're, in 2023, about 3 years past COVID, but gaps in employment are okay. You can have a gap in employment. I'm going to ask you why. Why were you unemployed, for 6 months? Why were you out of work for a year? Oh, I was laid off due to COVID. I was taking care of my mom. She was sick. I had a baby and we decided it made more sense if I stayed home. I was, finding myself, whatever the case may be. I'm going to ask and I want you to tell me the truth. And then I'm going to go back before the break and I'm going to prove that you had a history of working prior to. So it just depends on your situation. Sometimes you can be on your job for 30 days. Sometimes you can have an offer letter, like you're going to start working. Maybe you're transferring from Houston up to Dallas and you want to have a home in Dallas as soon as you get here. But you're not supposed to start your job for a couple of weeks, but you have an offer letter. It's a salary. All contingencies have been met. We can work with that. So like I said, it's so personal. All of these things don't meet, each person. But back to your original question, 2 years. So I want to see that you've been working for 2 years or you've been in school preparing to work. And then I want to look at your debt to income ratio. So your debt to income ratio is very simple. How much are you going to spend divided by how much you earn? And it's going to give you a percentage, 0.55, 0.41. Ideally, in a perfect world, I want you to be at 0.41, but we can go all the way up to 0.55. And I don't look at utilities, gas, food, auto insurance. I don't look at that. What I'm looking at are the bills on your credit report, your Discover payments, your student loans, your auto payments, plus your potential house payment. That's what goes into your debt to income ratio. And so I have approved people before and they say, oh, no, I can't pay that, because I'm not taking into account everything else that you might pay. I'm not looking at, what you do on your weekends with your money. I'm not looking at, how much your children's sports cost. I'm not looking at what you pay in health insurance. I'm only looking at the debts on your credit report plus your new house. So that's why it's important to talk to your loan officer, because you might say, hey, I can on paper pay that, but really to have the quality of life that I have, I want to bring that mortgage payment down. And so then we need to work at, your budget and your price point, making sure that we're picking the right loan program for you. Make
And this
sense?
is why it makes so much sense. And this is why I wanted to bring this conversation out in the open within the credit group. So grateful that you're a part of it. You said something that is key. Talk to your loan officer. Guys, just be honest about your situation so you can have that big picture. This is why I wanted Cassy also to join, because if you listen, no matter what I ask you, your brain is always moving forward. Plenty of times when I interacted with you, I was like, well, Cassy, my wife, she had a gap in employment. She hadn't worked. You was like, that's fine. How long has she worked? And I brought it up to you and you was ready. Okay, there's rules. There's things we can look at. There's other options. Everything is just not black and white. It's per your situation. And you'll never know if you don't take that step, if you don't move forward with it. And I think that's the key. Don't hide information from that loan officer, because that loan officer is going to see it. They're going to know where you are. You can't hide it. Pull out that bank statement, give it to your loan officer, submit those documents. Go ahead, because that's the person that's going to be able to work with you and say, you know what? Here's what I think is best. Here's what I think you should do. Here's the direction you should go in. Something else that comes to my mind about this, I put on Facebook today, it's not always wise to help people. Sometimes they have to learn by the things that they go through. So this conversation, talking and sharing that knowledge, that wisdom and the insight is so impactful. Sometimes in life, when you're coaching and trying to help, you get so involved that person don't learn anything. But that's what I love about the loan officer. They don't babysit you. They send you the link, you apply for the application, you upload your documents. You have to actually do the work. You have to submit those documents. You have to have that conversation. So here's the next thing, Cassy. what should a person be looking at for his finance? I know you can't give, a specific, but an estimate. If they're looking to buy a home, say for 300,000, 400,000. What if someone says, you know what, I want to buy a house for 200,000, 250? What should their income look like?
That is tough.
That's a
Um,
vague question because it
it is.
includes all the debt. And that's why I wanted to ask, because you brought up the debt to income ratio. You broke that down. But just general, should it be 50,000, 100,000? Just kind of give some insight, because I see that that's what also hold people back, thinking that the prices, the inflation, everything's going up. They just feel like they don't have enough, but they already paying the 1,600, 1,800, 2,200 for the rent anyway.
So if the income is 50 to 60,000, I can typically, provide a pre-approval letter, put somebody shopping in a home that they would be happy to live in. Um, with income at $30,000 and below, it is very hard. Those approvals are down in the $150,000 range. Um, and so I write them, and there are still homes out there, but I'm working with one lady. She's been shopping at the 150 range for 3 years. She's just now seeing homes that she could occupy, that because a
Yes.
lot of the homes, if they're inexpensive, they're in really, really bad shape, or they need a lot of work. And so she's seen two houses in that 175 range that she could could live with, right? But she missed out on both those offers because they sold to cash. But that's how hard it is if you're down, and that 35,000 $35,000 income range. We can do it, and I never want to turn anyone away, but it's going to be for the long haul. If we can get up to 50 or 60,000, then for sure, we can write an offer, and you can go find something in a price point, to something like that you could find. Um, for those that are in the lower income brackets, I've seen people buying with friends. You can also get a cosigner if you have family that loves you, a father, a mother, a brother, or sister. I'm doing one right now. They're a young couple, and the older brother's co-signing for them. So
Oh,
I thought that was really nice. Now they are young, and they are projected to make additional income in the future. So their plan is to refinance out of that in a couple of years and get the older brother's name off the loan. But that's one solution. Um, yeah, and actually, I was going through my list of closed clients, and I'm supposed to check back in on two young girls. They purchased a home together. They were like, "We were in an apartment together. We should buy a home together." So I'm
that
going to check
yes.
back in on them and see how their most recent 3 years and how their experience was. But you can get creative with your living situation for sure.
Did you hear that, everybody? Did you hear that? You have a roommate, you're renting an apartment, you might as well go ahead and buy. Let's talk about that a little bit. Each state is different, but I know right now in Texas, rent is up, and Texas typically one of the best states to live in for its finances, right? But now I've been in Texas since '05 from Louisiana, and I love Texas. But now I'm actually feeling it. Even though my income has gone up, even though I have side income, I am myself is just feeling it. Went to Walmart last night. Cassy bought a few items and $40. Just boom. I mean, it just
Yeah.
got a few items. So let's talk about that. Those who are actually renting, what is your mindset on rent versus buying? Someone may be saying, you know what, I'm going to buy in 5 years and I'm going to just get ready, but they're already paying 1,800, 2,000 on rent. What's your mindset about that?
I think as soon as you can purchase a home, you should. And that comes from my own personal experience. Real estate is a good investment. People are always going to want that house. They're not making any more land, right? So, for me, the I had some land when I was in my young 20s, and I sold it, and it was a big chunk of change, and it helped me do things financially whenever I sold it. And then I bought a home and when I was 26, and then I kept that one for a long time, and then I sold it, and it helped me do things. And then I bought another house, and it helped me do things. And I think we talked about this. I have 401k, I have my savings account, I have all that stuff, but the return on my investment was nothing like that real estate was, or is. So if you can buy real estate, you need to. It's a safe spot for your money to grow. So if you live in an apartment and you move out of your apartment, you are lucky if you get your deposit back. A lot of times people don't get their deposit or they don't want to put in the work to get their deposit. They just leave it there. So when you move, not only do you have to pay your rent on time, but you have to save up money so that you can afford to move. I think that's how people wind up staying in the same place for 7 or 8 years. They don't have enough money to move. When you own a house and you're making your mortgage payment, you're actually paying that debt down a little bit each month. And then at the same time, the value of your home is increasing because inflation, the cost is going to go up, the price of your home just rises. And it also goes up in true value aside from inflation. But when you sell your home, you're going to get something back. You're going to get the equity in your home from the time, even if you make minimum payments from the time that you moved in till the time that you sell it. And then if you're fortunate enough to keep the home that you bought and buy another home, you can lease out your old home and then you'll have someone else making that mortgage payment for you. And it's just a big piggy bank. Your investment is growing and someone else is paying to make that happen. So
Wow.
as
Wow.
soon as you come by, I highly recommend it.
That's that's so clear. It's an investment. You're right about that. It made me think about like interest. You're paying the rent, you have a place to stay, but like you said, when it's time to leave, you don't really get anything in return.
Mm-mm.
But if you're buying, you got so many different scenarios where you can get that return on your investment. So when you're paying, say, on your car, right? I work in the finance. I've been doing it over 10 years for a very long time. And customers may sometimes be like, you know what, I'll just pay later, or you know what, I'll just make my payment on my laptop later. It's only $30 a month. I can just be late on it. And something simple as a laptop interest could be way more than what your small monthly payment is, right? A car, anything that you're making payments on, that interest can eat it up. And you look back and you say, wait a minute, where's my money gone? It's all going to interest because you're not sitting there, you're not investing it, you're not paying it on time. You want to be able to pay those things on time so you can get that principal paid down. Cassie, a lot of people in other different states all over. They're talking. It's all over the YouTube, social media. Don't buy a house. Hold your money. Everybody's afraid. The bank this. The world's coming to an end. Take your money out the banks. Everybody's freaking out and don't really have a sense of direction. But people still want to buy. We talked about all these different variables. Which direction should a person be moving toward right now if they're afraid? How can you motivate somebody that's afraid and they think that the world is about to end and everything is about to crash?
I have been fearful in my life. So I get that. And how did I become unfearful? I just took steps. I'm not nearly as afraid now as I was back in, back when I was younger. Certain things just terrified me. I think experience, um, the sun always comes up. We've been through a couple of financial crises. Um,
Yeah.
we're still here. We still have to have a place to live. You're still going to pay to stay wherever you are. You might as well be investing in yourself. And that's why, you know, I talk about your house or your real estate as a piggy bank. It's going to go up and it's going to go down, but when you sell it, um, even if you break even, you're still, no worse off than you would have been if you would have been in an apartment. And the chances are you're going to be able to take some cash out of that to propel you further. As far as the market goes, okay, you want to make sure you can see my hands. I didn't see them. I talk
Yes.
with my hands a lot. As far as the market goes, right now, people think that home prices are depreciating, right? They think that they're dropping.
Hmm.
And I have seen the market settle. I haven't seen it fall, but I've seen the prices come down. People aren't paying over list anymore. And some people say, well, I'm not going to buy a house because I am going to wait until the prices drop. I'm not going to overpay for something. The prices are going down. Two things with that. Even if you overpay 20 grand for a home, if you stay in your apartment for a year, there's your 20 grand, so you're going to
Yeah.
spend it one way or the other. You might as well get into something that you like. Down here, when the market bottoms out, it's going to be hard for you to be the one person that caught the market when it was at the very tippy of the bottom and got the best price on that house ever. You're going to have a lot of competition. Everybody's going to be in it. And then when the market hits the bottom, you know what happens? It starts to go back up.
Yes, come on.
And when you're on the downhill slide, kind of where we are now, sellers are afraid. They're like, oh my gosh, what if I can't sell my house? I'm not going to make any money on it. I'm going to go, late on my bills. What if the seller needs to sell that house because they're in a really bad financial spot and they need that money right now, right? If they were a little more stable, honestly, they might hold that real estate for a little bit longer and sell it at a different time. So the chances are pretty good that if a house is on the market right now, that seller really wants to play ball and he's going to maybe come off the price a little bit more. Maybe he'll pay closing costs for you. Maybe he'll work with you for your timeline. What if you need to close in 2 weeks? What if you don't need to close for 60 days? If you're a hot buyer, he might be able, or that seller might be willing to work with you to help you get into that house. So if you wait until the market goes down here and starts on the rebound, what if you're going to pay that same price for that house, but now the seller knows what he has? People are competing and he may not be willing to pay your closing costs or come off a little bit or play with you on your closing date. There is no matter what situation you're in, there is an advantage to you being in that situation, even whenever you think the market is on a downturn. That makes sense?
Oh, I'm so motivated. I just love hearing this. Guys, do you hear this? You never know the seller situation. They ready to play ball. And you made it very clear if the house is on the market, they're ready to play ball. You just never know. So waiting could really work at your disadvantage. That's so true because in the time of COVID 2020, when those rates begin to drop, everybody start coming toward that market, including myself. And when I got out, just a house that I thought was nice. I didn't think, just looked at it on the internet. I said, well, that's just a nice house, and let's just schedule a tour. Cassie, I'm thinking it's just gonna be me and my family. When I got there, it was a line of 20 cars. Literally, I had to send a video to my primary realtor because another realtor met us there to show us the home, and I sent a video of 20 cars in line. And the house was listed under 300K. It didn't matter about the price range. Everybody was running toward all these homes. And you're thinking, man, I waited. I can't compete. It's too many offers. So right now, when everything looked like people are pulling back and holding back, it sounds like this is the perfect time. So if you're listening right now and you're saying, you know what, I'm ready to make a move, reach out to Cassy. I got the link in the description. Everybody that's on YouTube, you're watching this over and over again. The link is in the description. Cassy Sisk. It's cardinalfinancial.com/loan originator /Cassy Sis. And I'm going to put it there. Cassy, thank you for joining us. We want to talk a little bit about this more. Let's talk about down payment because you talked about that down payment assistance. You talked about having that cash. How much cash should somebody start saving? Just general, just estimate, just someone who say, you know what, I'm serious. Because we hear people talk all the time. I'm going to buy a house. I'm ready to buy a house. How much cash should they attempt to start saving? And if they don't have cash, what are their options based on the situations?
To have a good experience on a budget, right? To have a
Hmm.
good experience on a budget, I would say 5 to 6,000.
Good.
If you're gonna buy a home at $320,000 home, you're gonna need about $20,000 to close that transaction. And so if you don't have $20,000, which most of my clients don't, the first thing I do is I start looking for money. So we're gonna look at down payment assistance first. And if you were to qualify for, I don't have any figures, but are ready. Give me a minute.
No problem. And guys, get your questions ready on while Cassie is doing that. I see that you're watching. Let us know where you're watching from. Thanks for joining us. Put in the comment where you're watching from, what questions you have for Cassie. Before we end, I want to give her an opportunity to answer those questions once I see them in the comment. Go ahead, Cassie.
So let's just say that you bought the home for 320 and it costs 20 grand to close it. So the first thing that we're going to do is we're going to look for down payment assistance. In this scenario, we could probably get 11,782. So let's just say 12,000 for easy math. So that leaves us needing about $8,000 to close this transaction.
Mhm.
And the closing costs, and I could talk for a whole 45 minutes on the closing costs, but title
Yeah.
policy is probably the most expensive closing cost that you're going to see. It's somewhere around 1% of the loan amount. And the purpose of title policy is to ensure that the people who are selling you the property have the right to do so, and the property that you are purchasing is free and clear of any liens. So it's an important closing cost, but it is expensive. It's usually around 1% of the loan amount. So if the seller pays title policy on this, you go from needing $8,000 to close down to 5 or 6. And then if the seller's willing to pay additional closing costs, that's great. And then acceptable sources of funds for homes to close can come from your bank account, your checking, your savings. It can come from your 401k, retirement. It can come from your tax return. It can come from a gift from family. It can come from sale of personal property. You just have to, talk with me, and we have to make sure we have everything documented. I've seen people do garage sales, to come up with the money. It can come through accumulation of pay stubs. So say for you, you need $4,000 to close and you have 3,500 in the bank on the day that you want to enter into contract, but you're going to get paid 4 more times. We can approve contingent upon you having money to close, and then you send me your bank statements when your pay stubs post. So, 5 to 6,000 is what someone on a budget should have access to, I believe. If you are not interested in down payment assistance and you've been working really hard, some people have saved that money and they're proud and they want to put it in there, not have to worry about anything. You have that 20 grand, then you're good to go.
I love it, Cassie. That's why I like talking to you because it's obtainable. It's realistic. You're saying, hey, this is what can get you in the door, and more is better. If you start here, of course, you start at the 5 to 6,000. The 10,000 is even better. The 20,000 is even better. The 30,000, whatever you're able to do, is going to help you out. There's options for you. The reason why I say that, because just with anything in life, I think we'll allow roadblocks to stop us when really the roadblock is to draw our attention to something else. And what I mean by that, say you're getting ready to purchase the home and you make say 70,000 a year. In the house that you want, you really need to be at 80,000 a year. Guess what? That roadblock really puts your attention. You know what? Maybe I need to have other sources of income anyways. Maybe I shouldn't depend on this one income. Now you start moving, your brain start moving toward, hey, I need to develop this skill. What can I do at home? How can I work online? What else can I do? What can I sell? It's been times where I'm like, I need extra cash. Cassie, you wouldn't believe how many electronics I've had just sitting in the home. iPads that other people needed just sitting. I got brand new headphones right now that I've been trying to sell just sitting in the garage. One time, one of my friends from another country asked me about some tablets. I had 2 or 3 tablets that I wasn't even using. A lot of times, what we want and what we need is right there and we don't even recognize it. So I see roadblocks as opportunities and it prepares you for the next opportunity. So those that's watching right now on YouTube, don't be discouraged. Don't be discouraged by the economy. Don't be discouraged about the experience that one of your family members had or your friend had. Don't be discouraged because someone told you, hey, I bought a new home and less than a year it molded. It had foundation problems. Problems are going to arise, but it's there to make you stronger and you're going to get the wisdom from it. I'm actually writing a book. I'm almost done with it. It's going to be coming out called Harnessing the Power of Moving Forward. Why am I writing this book? You fail, now what? Failure is a part of success. You're going to fail. You're going to make mistakes. And that failure is only something that you see in front of you to get more wisdom from it. Wait a minute, let me try it this way next time. If you start a business and you only got 2 customers, you expected 100 customers. Okay, why didn't 100 customer come? Now you know why. Now you can take that information and take a step forward. A no is not a final no. It's not. You know how many people told me no, casting great about home? You know how many realtors told me no? No, you can't do it right now. The market is crazy right now. Nobody can buy a home right now. Home after home sold. So don't allow what you see and hear around you to actually stop you. Let's talk a little bit more about the closing costs. Cassie, somebody is watching, they don't really have all the details about Closing costs. You can't be prepared for everything, but what should a person be thinking about mentally when we're discussing closing costs?
Closing costs usually run between seven and $10,000 on a loan. And the closing costs come in two buckets. You have prepaids, which are like taxes and insurance. These are things that you're going to pay because you own a home. You're going to want to insure that home. Even if you paid cash for it, you won the lottery, paid cash, owe nobody anything, you're going to want insurance on that because if it washes away, you're not going to want to have to rebuild from nothing. So insurance and then taxes, everybody has to pay taxes. Those are considered prepaids. And you're going to pay for a whole year's worth of insurance up front. And then we're going to put 2 to 3 months worth of insurance in your escrow account for next year. And we're going to do the same thing for your taxes. We're going to put enough taxes in your escrow account so we can pay that bill when it comes due in October. So that's part of your closing cost. And then the other portion of your closing costs are fees that you pay because you're getting a mortgage. You could buy these goods and services if you paid cash, but no one would make you. You could buy an appraisal if you were going to pay cash. An appraisal tells you what your home is worth, what that home is valued at, what the average person would pay. And we want you to have that because you may walk into that home and you may think it's absolutely perfect and there's never been another home made and it's worth exactly what you offered, but everyone else might not like the pink bathroom tile and they may think that it's valued a little bit less. So we want that appraiser to go over there and tell us what the average person would pay for it. So that's a closing cost. It's a smart thing to buy, but if you're paying cash, nobody's going to make you. Title policy, we talked about that. That's a closing cost. It's a smart thing to buy, but nobody's going to make you. A survey, it shows you where your house sits on your property line, shows you where the easements are. Easements are places on your property that you own, but utility companies can come onto your property for the greater good. Like if you have a buried utility line there or you have a water pipe, they can come on there. So you probably don't want to build anything there because they could tear it up in order to get to what they need to. It's a great thing to have, but nobody's going to make you buy a survey. So those are all closing costs. So, and if you add your prepaids together with your closing costs, it's usually 7 or 10,000. And that was part of that big number that I gave you a minute ago. Your down payment plus your closing costs, roughly 20 grand on a $320,000 home. If
Yeah.
you use down payment assistance, we can get that down to, 6 or 8.
Cassie, that's powerful. Before we get ready to close this live, I want to talk about something that you said. It really stuck with me. One day, me and you was talking, and we was talking about home buying, and we were just sharing and things like that. And then you told me how you had to encourage a client to make a decision, and that's what I like about you. But you said that you had someone who was looking to purchase a home. They was almost to close, like all the things you just shared that's needed. But then they started like, yeah, we're about to close. So let me go get some furniture. Let me go buy some furniture. And you're like, look, do you want furniture or do you want a house? And that seems so simple, but it was like, wow, like take care of the house first. Once you close and it's final, you can go get all the furniture you want. And I think sometimes we get excited about things in life and we want it all at one time. I want the house, I want the wife, I want the husband, I want the kids, I want the dog, I want the cat, I want the brand new car. I want it all right now. It's not going to happen all right now, just a little bit at a time. And that's something that I had to realize. So I wanted to encourage others to realize that you want to make up your mind what it is that you want. Do you want the home or do you want the furniture? Because oftentimes we try to do it all at once and we miss the opportunity of the big picture. What will you tell someone when they're on this journey? They get ready to buy a home, these little roadblocks, these obstacles, these challenges, whatever, everybody has different personality types, they see it differently. How can they look at it to where they can move forward and don't allow it to stop them?
When you want it, right? It's going to put you in a better position when you want it. That's my favorite thing. When is a good time to buy a home? When you want to,
Yes.
you know, when you want to. It's so funny that you say these things. I have a sign in my home, and I'm sure it's a meme. I've seen it on Facebook, but it says, "I remember." I'm gonna cry. I remember when I prayed for the things that I have now. Oh my
Yeah.
gosh. You know, that's huge. And, I got there by baby steps, doing one thing at a time, buy the home, and then, then worry about your furniture, then, worry about furnishing it, one thing at a time. And never, well, I want to encourage everyone to buy a home. Don't change your habits to buy a home if you're not going to keep your habits changed,
Oh
right?
man.
Don't
Wow.
go outside. Don't pretend to be good, for lack of a better word, for 4 or 5 months to get this home when you're not going to be able to sustain those payments, because the home will go away. It will. You have to be able to make those mortgage payments time after time. And so if you're not comfortable doing the things that you're doing to get prepared to buy a home, let's revisit that budget and bring it down a little bit. Um, you're going to love your home. It's where you're going to raise, well, maybe you're not going to raise babies, but my home is where I raise my babies. But it's
Yeah.
where it's your safe space. It's where you go to do whatever it is that you do. It's also your investment. And so you should love it. And if you have a mortgage payment that you can't sustain, you're not going to love your home anymore. And you're not going to be motivated to take as good care of it. And it's not going to work. I've done that. I've lived in a home that was under my budget, and it was my favorite home ever. Wasn't in a big fancy neighborhood. And it was way under my budget,
Yeah.
but it was my favorite home. And I had a home that, oh my gosh, it was what everybody wanted, and
Yeah.
I couldn't afford it. And I hated that home. And I don't even go to that part of town anymore because I hated it so much. So it's just, whenever you're setting your budget, it's important to maintain, what do you want? What are you hoping to get out of this home? And make sure you're not falling into that trap of, if I only had a home, I would be happy. Right? Does that make
Yeah.
sense?
Oh, that's a good one. Keep going, Cassie. That's a good one.
Well, I
Oh,
think that's you can probably take that and run with it. I've heard you talk before, but
oh,
you know, you're
oh,
you're not buying a home to be happy. You're buying a home to invest in. It's a tool. It's to enhance your life. It's not the end all be all. The sun's going to come up tomorrow after you close on that home, and there's still going to be stuff to do.
oh, man, this I tell my credit clients the same thing because I realize when you're coaching, you're guiding, you helping someone navigate through the teaching and the knowledge and the wisdom. You're not helping in the sense of doing the work. When you do the work for others, oftentimes you're enabling their current behavior so they won't be able to maintain. It's going to go away, like you said. Plenty of times I've seen it over and over again. Several years ago, when I was actually doing the credit repair and not the coaching, I would go in there, do everything the right way, the legal way, go through the process. I did all the work. People loved it because I'm passionate. I'll just go do the tedious things that people don't want to do. And the credit score would go from 400 to 600 to 700. Literally 5, 6 months later, they would go back to the website because the credit score is back to where it was. And I actually had to send, it was about 3 years ago, I sent the client's money back. I said, I'm not doing it. He was like, what? I said, I just fixed your credit 6 months ago. And he was shocked. And I told him, I said, I don't do this just for money. I do this because I want to be able to empower people. So I made that switch from credit repair to credit coaching. And it brings me the greatest joy when I see my clients. Marquez, I did it. Marquez, they responded back to me. Marquez, this is what happened. I submitted, I mailed off the dispute letters. Marquez, my credit score went up 20 points. And they feel empowered because they know all I did was just have a conversation with them, just motivate them, just kind of help them navigate, confirm, and validate, yes, you're going in the right direction. No, don't pay that off unless they put it in writing that they're going to remove it from your credit report. No, don't do that. Hey, do this. And they get the results and they're overjoyed. Now, here's how I know they're being successful because they start reaching out to me. I'm not creating a scenario where they're depending upon me to do anything for them. I was like, I haven't heard from you in a while. Everything's going good. I'm ready. And one of my clients closed on a home. Hey, Marquez, I'm closing on my home. That's why I hadn't talked to you. I'm busy. And it's just such a joy, Cassie. We get ready to close. I want to put your information on the screen, And while I'm doing this, I want you to share after I put this on the screen. I want you to share your last remarks, anything that you just want to share, because so many people is going to be reaching out. I'm going to have this on YouTube, Facebook. This video is going to be available for you so you can watch it over and over again, rewind it back, fast forward, whatever you need to extract from it. And I hope that you get this information and it encourage you to go ahead and move forth. But let me put your information up, Cassy. If someone last remarks, anything that you want to share right now, what's to come to your mind to close out?
Just I'd like to thank everybody for watching and tuning in today. And I'm always available via email, text, phone. A short link to the website is callcassy.com if you don't want to type in the Cardinal Financial / LO. And
Yes.
I am just looking forward to talking to anyone who wants to talk, even if it's general questions. Kind of point you in the right direction to get you ready.
That's true, and she will do that. I have experienced that. Callcassy.com, y'all, very easy to get to. I have experienced from my own self. If you speak with someone in the mortgage business, because you have some people that's just not, how can I put it, not as business minded, I would say. Some people just want it right now in this moment. If you're not ready right now in this moment, it's like next, move it on. But what I love about you, you will still share enough information where the person can be headed in the right direction. Because it happened with me. I'll reach back out to you 6 months later. I said, Cassie, my income is here now. I'm ready. What can I do? And you was like, hey, just here's the link. You didn't write me off. That's basically what I'm getting to. You didn't write me off. You didn't pull me to the curb. You had that conversation. You put the facts there. You put the information in front of me so I can make a decision. Guys, this is the time now to make a decision. I laugh at my wife sometimes because she's indecisive with some things. I'm like, what do you want to eat? She's like, I don't know. I'm like, so now I've learned to ask her hours in advance. And my daughter is the same way. She's 9. I'm like, Hannah, what do you want? Get any snack that you want. She said, Dad, it's just so many choices. I don't know. Guys, there's so many loan officers out there. There's so many information out there. There's so many houses, so much opportunity. But if you're listening to this, I promise you, you're listening to someone who's leading you in the right direction. Thank y'all for watching. Cassie, thank you for joining. Thank you for being a part. And you guys have a great day.
Thank
Bye.
you. Bye.